Right, what is going on, everyone? So this week, I wanted to continue the mentorship series and go over basically market structure and order flow, as well as kind of pairing the previous mentorship videos into this to kind of see how they all kind of blend together. So what I'm going to do is just go over Friday trading session, and using the market structure and order flow guide that I'm going to kind of talk about today, we'll kind of go through the market and see how it delivered. And of course, bring in some of the other mentorship content into this day to blend it all together. So, up until this point, what have we talked about so far? We've talked about risk management, psychology, the most important things, because I'll say it every single series I do, every single video I do. I'll probably mention at some point that models, any type of trading model, is inferior to risk management and your psychology. That's got to come first. Without that, you're either going to get lucky sometimes or just continue to spin your wheels and wonder why you're not making progress, because without that psychology and risk management set in stone with your rules in place, the models themselves are not going to be able to be managed properly, right? So that has to be the foundation to your trading. And if you haven't seen the first episode of the mentorship, I highly recommend going back, watching it. I would watch it twice. Okay, take notes. Something in that video needs to jump out at you. Okay. Now, risk management itself is, of course, talked about a lot, but if you go through that video, you can kind of just see that there's more layers to it than just cutting a loss. Okay, there's more layers to risk management. There's daily loss limits. There's understanding leverage. There's risk sinking. There's not capping your winners and capping your losses. There's a lot of layers to it. So I really encourage you to continue to build that as a foundation before you venture into mastering any kind of model, right? But anyway, all that being said, let's go through here, and I'm going to talk about 5 and 15-minute structure and order flow to kind of guide the models that we trade. So basically, anytime I'm looking at the market, okay, I'm looking at it with, of course, market structure, which is swing highs and swing lows, paired with 5 and 15-minute PD rays. Okay, that's pretty much, I trade on the 1-minute chart. This is just me personally. Now, it doesn't mean you have to do this, doesn't mean this is the only way or the best way. You can trade on any time frame. It's pretty much all fractal, okay? But for me and how I trade, I can only teach how I trade. So I trade on the 1-minute, and sometimes I'll enter on the 5-minute, but 1 and 5-minute for the most part. I guess everything in between there you can call 2-minute, 3-minute as well. But that all kind of would mesh together to me. So since I trade off the lower time frame, we'll just call it lower time frame, then I'm going to be using the 5 and 15-minute structure the most to dictate my order flow, because I'm essentially trading every hourly candle. If I find a trade within that hourly candle, I will be looking to take a trade. And that's where my Q3 model comes into play, right? Because we get a new one every 90 minutes. Now you can trade in between them as well, of course, using market structure and the models. But the Q3 is one of my favorite trades of every 90 minutes. So every time we get that, I'm looking at 5 and 15-minute order flow on the chart. So let's look at Friday. Okay. So first thing in the morning, what I'm doing is pulling up the 15-minute chart. Where's Friday? So here's midnight, start of Friday. So what I'm looking for is on the 15-minute chart, are there any important 15-minute PD rays nestled around midnight open? Anything around here that I would want to mark out? So right here, we have this 15-minute BISI, right? 15-minute fair value gap here, nestled around midnight open. Now this is all before 9:30, right? Because I don't really start trading until 9:30, typically 9:45. But prior to 9:30, I'm still looking at market structure, okay, using the 5 and 15-minute order flow. Again, it's also important to keep higher time frame context in mind, 1 hour, 4 hour, daily. But as far as I'm concerned, for the trades I'm looking for, I'm keeping that in mind. Of course, you want to look at the 1 hour and 4 hour. Okay, see what market structure, see where we're delivering from, what we're holding. Okay, so obviously there's a 4 hour right here. The price has been delivering from all week. So price has been bullish all week, and I could look at on the 4 hour. We have this new day opening gap, or new week opening gap up here that was unfilled with the flat candle. We know that flat candles technically could be considered a draw on liquidity, right? They need to be rebalanced and repriced too. So when I see this 4 hour candle, right, being held by the bodies are holding this 4 hour candle, I can assume, and I've been talking about this all week, I'm assuming that price is going to try to find its way to come up to new week opening gap, reprice this flat candle until we lose this 4 hour, right? So that's kind of my thesis going in. But as far as like the new day is concerned, I start off with this 15-minute here with midnight open. So now that I have this right here, I consider this candle, this 15-minute candle with this PD array, which would be the BISI, the fair value gap. See how this is holding as a floor before 9:30. The bodies are continuing to hold this, right? So when I see this, what I'm doing is essentially saying, okay, for now, for the time being, this is currently the floor. I'm bullish for now until we lose this, right? Or we make some sort of new market structure, and we'll talk about that in a minute. So going into 9:30, I have this 15-minute marked out. Okay. So now we're on the 5-minute. Okay. So now we have the 15-minute marked out. We see that we're delivering from this right before 9:30. What happens here? This bearish 5-minute fair value gap at 9 o'clock. Draw this out. Is price respecting it? No, not at all, right? Closes right through it, right at the opening bell. So right now, order flow for me, likely still bullish, right? So if you're not in a trade here, so if there's any trade you find at the opening bell to get in long, that's great. That would be something you could look for in the lower time frame here, using any type of entry model that you would prefer, right? So let's say we went through that 15-minute and 5-minute structure. We see that price is bullish. We know that we're trying to look for a long off the opening bell. Got a 1-minute inverse right here going into Q3. This could be a beautiful long, assuming that you're holding the 5-minute inversion, 15-minute fair value gap we had marked out. This is continuing to tell me we have floors until we don't, right? So once price is going up, at this point, let's say you didn't get a long and you're just watching price. Once we're pushing up into here, going into midday, this is where, I myself start to potentially look into two different things. There's two different things you could do here, depending on your style of trading, depending on your risk profile, okay? I personally am a reversal type trader. I like to try to catch reversals. Now, will I try to catch continuations as well? Certainly, of course. But sometimes, okay, more times than not, okay, the market is going to range. Statistically, the market is going to range more than it's going to trend. That's just statistically a fact. So knowing that, more times than not, I'm looking for key price signatures to try to catch a really nice entry. Now, what it's going to all boil down to is 5 and 15-minute structure, okay? So before, like I said, there's two ways you can look to trade this, okay? If we're continuing to push up here, going into, past 10 o'clock, we start to get these new root candles to print, right? So 10:34 here, which, I use as a potential pivot level, right? 10:34 a.m. opening price. If I want to try to catch a reversal, this is what I always say on stream. If you're going to try to short a trend or long, a downtrend prior to any 5 or 15-minute structure showing you inversions, you're going to have to be open to taking paper cuts, okay, or taking stops and just make peace with that, or just don't do that, you know, and wait and sit on your hands till you get that 5 and 15 minute signature that we're going to look for. Okay. But if you want to try to catch an entry on the lower time frame prior to that happening, you can wait for some sort of clues, right? Now, this is where I try to short on stream after we close back through this 1034. Now, did we get a market structure shift below the swing? No, we did not. Did we get a 5-minute inversion? No, we did not, right? In fact, we have a 5-minute BISI here. And we had a 15-minute. I had this marked on stream. Let's see, let me put this back up here. So this 15-minute SIBI I had marked out. Which reminds me that as price is pushing up, since I'm somewhat of a reversal trader, I would categorize myself as somewhat of a reversal trader. As price is pushing up, I'm looking for potential PD arrays where this, you know, where price might be seeking to go and reprice to and potentially reject, right? So as price is pushing up, I'm looking to the left, and again, I'm using 5 and 15-minute structure. I mark out this 15-minute SIBI. So knowing that it's up here, I have that marked on my chart, and now I switch back to the 5-minute structure here. We have this 5-minute BISI. Price comes down, still tries to hold it. Now, in real time, on the 1 minute, I was potentially trying to front run a 5-minute inversion here to get a better entry because I like to average up into my winners. And if I average up into my winners, I like to try to keep my stop protected. So if I'm trying to catch a reversal here without that 5-minute inversion, again, you have to be open to, you know, you're fighting the trend, right? So you have to be open to taking paper cuts and losses, or just not take those types of trades and wait for the next thing I'm about to show you. Okay. So for me, I did try to short this retest of 1034 that broke down here, assuming that maybe we were going to get a 5-minute inversion to go lower. Price was just not ready to go lower. So what did I do? I took a quick stop. I stopped out. We closed back above here, stopped out of the trade. So then I told everybody, okay, now we're just going to wait. We're just going to wait for that 5-minute inversion because right here didn't quite get that reversal that I was hoping to get during this time of day. So what I do is I wait for the next PD array, the 15-minute PD array that we had marked out here to get repriced to. So it finally came up into this. What did we do? We start rejecting this 15-minute SIBI that we had marked out. So far the example I've showed you is that I do take losses and they're going to happen. Okay. But the loss I took here is based off of me basically taking a skeptical short, right? Because this short, like I said, we didn't have that 5-minute inversion yet. Okay. If you want to be a little bit more risk adverse, you wait for that 5-minute inversion on these pushes, you know, in the AM session that goes straight up like this. And you wait for some sort of higher time frame key level or PD array to be tagged, and you start to form rejections, and you start to build clues like we talked about in the other mentorship. You're building price clues, right? You're always building price clues. So while I was streaming, I said, okay, I'm going to wait now, and I'm going to try to catch the next short because I do think the short is coming because we just rejected this 15-minute SIBI. Price is not really trying to displace through it. We've already extended straight up from the open, and more times than not, I can anticipate lunch to start looking to run stops. At the very least, run stops, potentially full-on reverse against this liquidity down here, right, from the AM session. So when I know that that's highly likely to happen, I now can start putting the puzzle pieces together and wait for that 5 or 15-minute structure to start to form. Okay. So again, we see this 15-minute SIBI get rejected here. So what am I doing? I'm switching to the 5-minute chart now on stream. Okay. Now we have this 15-minute BISI from before, right? Mark that out. Because that's going to be a key point of interest for later on, okay? So this 15-minute SIBI right here, we're getting this rejection. Now, again, I'm putting together the price clues. What happens here? We get Q3, right? So what am I looking for in Q3? Potentially Q3 inversion fair value gap that I can trade, right? Based off 5 and 15-minute order flow. So right now we're bullish going into this 15-minute SIBI. The 15-minute SIBI is showing rejections. If you watch the previous mentorship video about Q3, we talk about the criteria needed to make a Q3 trade valid. Criteria: either reject a higher time frame PD ray, hit a time level, or sweep liquidity, right? One of those three things. More, the better. Okay, so as we push up, we reject this 15-minute SIBI. Going into Q3, I'm now telling the stream, hey, I'm looking for a potential inverse fair value gap here to try a short, because now we're finally rejecting this 15-minute structure. What do we get here? When does this fair value gap, this bullish fair value gap, when does it get inversed? Not here. Here. Where is this happening? Inside Q3. Okay, another puzzle piece. So, 15-minute SIBI rejection. Q3 criteria, reject PD ray. Okay, the thought in mind that at the very least, I would like to try to see a sell stops get ran here. Okay. Price closes through this. We get the retest. This is where we went short on stream, right here. So I took a paper cut short here. That was a loss. Okay. Waited for more information. Start to make more puzzle pieces. You know, put those together. Q3 model shows up. I'm going to give it a shot. Okay. So Q3 model, go short here. Take this short. Look to target TMSO. That's the model, right? Now, of course, TMSO was pretty close to this, so that's not very, not a lot of points there. It's about 12 points. However, what we can do is wait to see if TMSO breaks down. We close below TMSO. Now what do we start doing? Now we start looking at, remember that 5-minute BISI, right? Again, I'm using these 5 and 15-minute PD rays to kind of guide me throughout the day on how I manage my trades, how I look for entries, how I try to dictate order flow. So when we went short here on stream, took this short here, I told everybody, okay, once we break below TMSO, now we have to see what happens back here at this 5-minute BISI. This is a good time to protect your trade. When I say good time to protect your trade, this is where I would now go break even on my trade. Okay, you could also even take a partial here, because in real time, we don't know if price is going to bounce off this 15-minute, or sorry, this 5-minute BISI back up again, right? We don't know that yet in real time. So what I'm doing is, if I took this Q3 model short, this is where I can protect my trade, put my stop to break even, or take a partial. And these are all things you can do here. Once we see price inverse this 5-minute BISI, and we're still in a short, by the way, I'm telling everybody, okay, here's our new targets for the short. We have this swing low, and we have this swing low from the AM session. Now, if you watch my trade recap video, or the replay of my live trade, you'll see that once we make this 5-minute inversion on the 5-minute chart, once we get this 5-minute inverse here, what do on stream? I added to my winner here. I averaged up. I added more shorts to target this low. So as soon as we got this inverse, I added more shorts. Because again, this is telling me that we got this 5-minute to fail Again, I'm already short from here using the Q3 model. Once we got that 5-minute close, the 5-minute close below here, I added more shorts and told the stream I'm targeting this low. Okay, so I added more shorts from here. I added more. It brought my average down to right around here. I believe it was like right around this area. And I told everybody, okay, my final target is going to be this swing low here from the AM session. And we'll look to see what price wants to do after that. So we finally did get that target after averaging up, and that would completed the trade there. So I took a paper cut on this short. You know, this short, like I said, speculative, right? Doesn't mean you need to try this. Sometimes I like to catch reversals, but if I'm going to try to catch reversals, sometimes I'm going to take paper cuts. Now, if I do catch this reversal, I'm going to have a really nice entry to average up on later, right? Alternatively, you can wait for more clues, higher time frame rejections. Q3, huge clue, right? Q3 model can tip its hand before the market structure shift even happens, right? Okay, so now that we have this 5-minute inversion, okay, this is something to pay attention to the rest of the day, right? Again, I'm looking on the 5-minute chart again. Looking for more PD rays, okay, for later on in the day now, going into the PM session. So we know that this was now an inverse, right? Now, do we have any new 5-minute structure to work off of going into lunch PM? Yeah, so now we have this 5-minute busy here. Price pushes back up after sweeping this liquidity that we took the short into. Price now pushes back up. We close above this high. We make a new 5-minute busy. And price continues to try to hold it. See how the bodies are continuing to try to hold it while it's also engineering low resistance liquidity here. Now if we shift down to lower time frame, we can see price is trying to respect this 5-minute busy, right? It's trying its best to respect it while engineering low resistance liquidity, which we actually kind of have all the way up to the highs, right? So this is where, you know, could potentially be looking for longs now, right? Because we did make this market structure shift. We have now a new 5-minute busy. And this is where risk management is going to come into play, because this is also a really good example on why risk management is so important. If you're trying to take a long out of this 5-minute busy, there's nothing wrong with that. You have the market structure shift. You're getting engineered liquidity. I can see why you might be looking for a long, right? Price ends up inversing this 5-minute busy. So if you're long here, this is where it's important to take a quick stop. Why? Because price now has closed below and inverse this 5-minute busy, telling us that order flow is likely not going to shift bullish now. Order flow is likely shifting bearish again, right? After this was created, price kind of danced around inside of it, engineered liquidity. Valid potential long, you know, I don't hate the long here. However, you get that close below, you need to stop out, okay? That's a quick stop. Using that 5-minute structure and 5-minute order flow, telling you price is not ready to go back up, okay? So you actually get the inversion there inside of Q3. You can see we're just kind of consolidating. This is like just time distortion, right? Not really a whole lot going on here. However, once you get the 5-minute inversion, now you can start looking for potential short entry models, which you have this. Now this is something you'd have to catch in real time really quick, because once that 5-minute inversed, you didn't have a lot of time, you know, to find that entry. You have to do this fairly quick. But even if you miss that short, price sells all the way down here. And again, you can start looking for points of interest on where price might be going, where it might stop, right? Remember that 15-minute gap we had here? It gets inversed. uses it as an inverse, closes back below. It's completely melting through all these PD arrays, right? So unless you're looking for a potential turtle soup long where you're going to have to stop quick, there's no potential bullish setups happening off this 5 or 15 minute structure at all, right? It's just straight melting through all these PD arrays. So you keep looking for, okay, where's price potentially headed? Where's the draw on liquidity? Most likely on the chart here. Okay, we have a 15-minute PD array nestled under this low. So live in real time, I'm looking at this and I'm saying, okay, I have this marked out. This is a 15-minute PD array, 15-minute BISI. We got this low right here. This, for me, is probably potentially the draw on liquidity at this point, right? After we've closed through all these bullish PD arrays, closed through midnight open, I'm looking, okay, well, where's the next imbalance? Where's the next important liquidity pool, right? These lows, this imbalance. So knowing that, I can go back to lower time frame now. And if we have not arrived here yet, I can pull up the 5-minute. And this is where you can try to trade along with order flow. 5-minute SIBI that was made displacing below midnight, pushes back up into it. This particular BISI, SIBI, is now really important because why? It's nestled around midnight open. So for me to get more bullish on price again, what do I want to see? I want to see this 5-minute SIBI get inversed and close above midnight open, right? Because that would tell me that price is strong again. So now we're displacing back through this PD array and a key time level. That would be two pieces of the puzzle that I'd be putting together for longs, right? Alternatively, I can wait for a move down to where I think the draw on liquidity is, this 15-minute PD array after taking out this liquidity. Similar to what happened here for the short, I could look for a potential long out of here on lower time frame using Q3. Has price reached it yet? No, not yet. So am I taking a long? No, not yet. In fact, on stream, what I said I'm going to do is if we don't get into here before Q3 and we start to pump, I told everybody on stream, I'm going to look for an opportunity to short to try to target lower down into here. Now, of course, we're running out of time here. However, what happens? Again, it's important to have my 5-minute structure marked out, which we did on stream. We had this 5-minute SIBI marked out as well. Another 5-minute. Again, dictating order flow here. This 5-minute bullish PD array that was created immediately gets inversed, right? So order flow is still bearish at this point. Until when? Until I think we get to the draw on liquidity. And then I can start looking for a potential Q3 reversal on lower time frame after we've reached this 15-minute gap nestled with these lows. We have not reached that yet. So for me to go long, I'm gonna need to see that. Otherwise, I'm still looking for potential retracements to target short, to target this liquidity, okay? Before I'm looking to flip long. So here we get, again, the mentorship model is kind of coming together here. Using 5 and 15-minute order flow. You have Q3. Price did not hit our draw on liquidity yet. What do we start to do? We start to make a move up inside, starting here at Q3, right? We go up, we reprice into this 5-minute SIBI. And if you watch my execution video, you can see this is where I went short. Right off this, yeah, it was right here. This 5-minute SIBI, again, I'm anticipating price to want to draw into here. So I took this short. I was waiting for us to get up into the 5-minute SIBI. I said I'm going to wait to short until we get up into this 5-minute SIBI. I'm going to take that short. I took it here as soon as we tapped into this 1-minute PD array, nestled in this 5-minute SIBI. And I tried to front run a Q3 inverse here. So this was me just tagging the 5-minute SIBI, 1-minute SIBI nestled inside there, using what? 5 and 15-minute structural order flow. 5-minute SIBI, 15-minute PD array down here where I think price wants to go, nestled with these lows. That's telling me that this is a manipulation move to reprice liquidity to bring it back down again, okay? So this, even if this trade would not have worked, which it did work out really nice. Even if this trade would not have worked, it would be a trade that I would have taken. You know, I like it. Now, did you have to try to take the short right at the 5-minute SIBI with the 1-minute PD array? No, you didn't have to take it right here. Okay, I entered here, but you could have waited for what model to play out? Q3 inversion model. Q3 pushes up. We tag a 5-minute SIBI. What happens? We reject. We now wait for that inversion to be created, which is created here. You could enter short now on this retracement. Stop is above the swing. Look to target. What did we target on the Q3 inverse model? TMSO or candle body liquidity. That's the model, right? So you could have entered short here. That's where I entered short on stream. Or you could have waited for the model itself, the Q3 model, to play out using the 5 and 15-minute order flow and structure, adding those puzzle pieces together. Okay, you're constantly putting puzzle pieces together. Okay, you got the 5-minute SIBI. Assuming this is your draw on liquidity, you can use this, anticipate this to be a manipulation move, right? So when I went short here, I targeted TMSO. Okay. I wasn't holding to here because, well, we didn't have enough time left in the day. Price did end up coming down, sweeping the lows here, but still did not quite reach that 15-minute PD array. So I'll be watching for that later on. But as far as the model goes, you know, TMSO is a nice target. So that did deliver us about 73 points right there at the end of the day. We actually got in near the top of this candle, about 75 points or so. Now, if you just took the Q3 model, give yourself about a 40-point trade, or if you targeted the candle bodies, you know, almost 50 points. Again, on stream, I was saying there's one or two things I'm going to do here. This Q3 using 5 and 15-minute order flow. We come down and tap this 15-minute PD array, sweep these lows from over here, dig into this 15-minute PD array, and we get a bullish. Let's say we would have created a SIBI on the way down into this 15-minute PD array in Q3, and we get an inverse right here. Then that could have been a potential long I would have taken. So I told the stream I'm either going to go short or I'm going to go long here at the end of the day, depending on what we do with this 15-minute gap and this 5-minute gap. Okay, using 5 and 15-minute order flow. Price did not reach this yet, assuming that's a draw on liquidity. So now I'm assuming that this move up is shortable to try to target this. So that's essentially what I'm doing all day long. I'm just looking at 5 and 15-minute PD arrays as price is delivering. Again, that's no different than the highs up here. Waiting for that 15-minute SIBI to get hit. We're showing signs of rejections at this 15-minute SIBI. We get Q3 now to kind of guide us for that entry model. The reason why I like Q3 so much, this model that I've built around it, using these 5 and 15-minute PD arrays and order flow, it sort of gives you an edge on entering before the big move happens in most cases. Okay, so using again the puzzle piece of the 15-minute rejection here, you wait for that Q3 model to play out. You give yourself a high probable opportunity to get ahead of the 5-minute inversion here, right? Remember how we had this 5-minute BISI here? I was able to get in this short prior to us even inversing this 5-minute. Using the Q3 model, right? And 15-minute structural order flow. So if you entered on that Q3 model, you take it down, like I said, you protect the trade, maybe take partials. Now let's say you didn't take this Q3 model and you're strictly using what I'm talking about here of the 5 and 15-minute order flow, and you wait for this 5-minute BISI to get inversed, which on the 5-minute chart would have been this 1140 candle, right? We inverse here. Now what can you do? If you're only strictly using this 5 and 15-minute order flow as a guide, and we just inverse this 5-minute BISI, now you could be looking for a potential short on a move back up into this 5-minute, right? To target what? This liquidity here that still has not been taken from the AM session here, this swing point. Now, why am I targeting this swing point here? Why am I targeting this specific wick? In fact, someone asked this on stream when I was in this short. Why are we targeting this wick? Well, this structural move up to this 15-minute SIBI, where did that originate from here? It originated from this cluster of candles, right? We got pretty much consolidation here, right? Moves up, consolidates, moves up, consolidates, moves down, consolidates, moves down. See how market is just flowing there. So this structural order flow, this is where that move originated from. So what is this here? This is a lower time frame. Whoops. A fractal lower time frame market maker sell model. This move right here started, this impulse move up started from this cluster of liquidity here. So when I see this 15-minute SIBI reject and I get my Q3 inverse model and we get the 5-minute SIBI get inversed, or sorry, 5-minute BISI get inversed, I'm looking for this liquidity to get taken out, and that would complete this fractal market maker sell model here. Okay, so if you got this 5-minute BISI inversed, you didn't take this short up here, you missed it, and you still want to try to target this liquidity. Now, is it as high probable as maybe the short from here? Maybe not, right? Because this is the lower risk entry on the sell model using Q3 as your guide, right? The Q3 is an absolute cheat code, you guys. I believe that wholeheartedly. It's one of the best models I trade, okay? But again, if you didn't get this, using just the 5 and 15-minute structural order flow I've been talking about, you get this 5-minute inversion. Now you can look for a retracement back up into it and use another lower time frame PD array inside that inverse to take short to target this liquidity that started this move up. So what do you get here? You get the 5-minute inversion created here at 1140. Price does sweep this liquidity here. And then what does it do? Redo. It reprices back up into that inversion, because what is the market always doing? It's either looking to take liquidity out of the market at either highs, lows, or candle bodies, or it's looking to reprice imbalances. From the Q3 model, it went short here. We got the 5-minute inverse. It sweeps this liquidity. What does it do? It reprices back up into this untapped 1-minute SIBI inside this 5-minute now inverse, right? It became an inversion. So you could have taken this short just using the 5 and 15-minute structure. So even if you waited all day long and didn't take any shorts on this move up and you said, nope, I'm not going to try to catch any reversal trades. I want to have, more high probable entries here. And I'm going to look for continuation trades based off 5 and 15-minute order flow. You could have waited this entire move here if you missed the long and you don't want to take a short until you get that 5-minute inversion, which I would say in more cases than not, if the day is trending, you wait for that first 5-minute inversion before attempting any shorts using lower time frame entry models. You finally get this inversion. You take this short. Now, albeit it wasn't, this whole move here, right, from Q3, but still, it delivers you. If you took this short here on the retest of this 1-minute SIBI inside that 5-minute inversion and you target this swing low here, that's still a nice 40-point trade, right? So patience pays off here. If you're very patient, wait for the market to tip its hand. If you don't want to take any speculative reversal trades, again, this depends on who you are as a trader, your risk profile, if you're risking profits, there's so many different factors that play into that. But this right here, very, very patient. If you're not taking Q3, if you missed Q3, that's your 5 and 15-minute structural order flow trade to take into this liquidity. So again, 15-minute PD arrays, 5-minute PD arrays, guiding me with order flow, using the Q3 model for potential high probable early entries, or waiting for that 5-minute inverse to be created to now look for the short, or add to the winner. Again, I didn't really add to this winner until after this 5-minute was inversed. That's when I started averaging up, adding more shorts and then took everything off down at the low. Okay, and it's no different down here. I was waiting for either the long tapping this 15-minute BISI, literally an inverse of that short up at the top. I would have wanted a long from this 15-minute BISI with a Q3 inversion on the lower time frame going up. Since we did not get that, I'm drawing out my 5-minute structure, assuming that this is a manipulation move to reprice back down. So now I'm using this 5-minute structure and the Q3 model to enter short, right? Again, I took the short early. I took the short off this 1-minute SIBI nestled in this 5-minute BISI because I was confident price likely still needed to go lower. But again, if you skip that and you just waited for more confirmation, waited for that Q3 model to play out, you could have entered short with the Q3 inverse and still targeted those candle bodies, you know, for about 50 points. Even just TMSO is about another 44-point trade there. Okay. If you entered from here, you're looking at 70 plus. So essentially that's what I'm doing all day long. 15-minute order flow, Q3 for entry models, and basic market structure. Okay. So that's just an overview of using 5 and 15-minute order flow paired with the Q3 inverse model. And of course, you mesh all that together with your risk management, right? Because all that has to come together with your risk management. Now, further down the line, we're going to get into more time-based models that, you know, can add even more layers to all this as well. But before we get into all that, I'm just showing you guys that simple market structure based off 5 and 15-minute order flow and the Q3 model, okay, blended together with liquidity points can be a high probable way to at least navigate the market and read the tape. Okay, even if you're not taking these exact trades, it can help you read the tape and anticipate where the market might be going next. Okay, based off that 5 and 15-minute structural order flow. So I hope that was helpful. Again, I really recommend going back through the different mentorships and piecing it all together with risk management, psychology, time levels, you know, using the different time levels involved here with order flow, 5 and 15-minute order flow, and the Q3 inversion model. If you're kind of putting all this together, you can start to kind of anticipate high probable trade entries, high probable moves, start to anticipate where the market might be going next, where we might see reversals, you know, all these things you can piece together. So anyway, guys, that's going to be it for today. I hope that was a helpful session. If you have any questions, you know where to find me. Again, this will be posted on the Kingline Discord free mentorship section. It is completely free to join our room and check out all that stuff. Otherwise, if you want to trade live with us and get more in-depth, you know, other offers or other offerings of mentorships and things like that that we do in there, they're all included. They're never upsold. You know, it's all just $24.99 a month. So if you want to take it a step further, you know where to find me there. Otherwise, you're welcome to join for free and check out all the free content we have in there too. So again, hope that was helpful. Any questions, let me know, and I will talk to you guys next time.